Hey gang, Akil here and welcome back to another Trading Edge video. If this is your first time joining me, I am a Forex trader and Forex trading coach over at tier1trading.com, and this is a weekend video that I'd like to put up on YouTube showing you kind of an inside look at the daily video that our Tier 1 trading members get. Now, I apologize in advance. You can hear my voice is a little a little shot. I had a nice little get together yesterday. There was a Red Cross ball called the Philly Red Cross ball yesterday, celebrating obviously the Red Cross charity, and well, let's just say we had a very good time, and well, my voice is paying the price for it. But I'm still gonna hopefully give you a quality video today. Now, before I forget, for you guys that are going to be involved in the Q&A tomorrow, what we're going to talk about is the higher high, higher close, and higher and lower low, lower close principles, as well as a very interesting subject. As many of you guys know, this week was a big week in the markets, kind of headlined by the interest rate decision. And well, if you've been involved with me, you also know that, well, on that same day, we had a big storm come through the Atlantic region of the US, which knocked out my internet. So I'm gonna tell you guys or talk to you guys a little bit about how to manage your trading situation when you're in a crisis. And for you guys that watch the trading module on putting together a trading plan, this is why we add that very last section, right? Just in case. So tomorrow should be a fun session. But let's hit into the charts today. Again, I'm going to show you guys a simple trend continuation setup using a very simple and classic simple pattern formation over on the dollar Canada. Let's go check it out. So the chart that we're looking at is going to be the dollar Canada on the daily time frame. And I always like looking at the daily time frame because it gives me really a better perspective on what price is actually doing. I get a lot of questions about, is it better to be a swing trader or a day trader? Is it better to trade this time frame or that time frame? In reality, price moves the same on each and every time frame. However, there's less and less noise the higher you go. So the lower time frame you go, whether it's a tick chart or a range bar chart or I hope not, but the minute chart, you're going to see a lot of noise in the market, meaning a lot more false moves. As you go higher to the hourly, the 4 hours, the dailies, the weekly, right, you get less of those false moves because it takes so much longer for those actual candles to complete. A lot of that noise really isn't even shown on your chart. So I like this to really kick off my analysis, have a clear view at what I'm looking at, and start gaining my perspective and making my predictions on the market. So for today's video, we're going to take this back to the basics, right? So the first lesson in our price action course, which is how to read a price chart. And we're going to look at simply what has price action done, right? Obviously, we have been in a downtrend on Canada here. You can look at this as being part of our previous downtrend. We then rallied up, violated our previous outside return. This puts us into what I call a bullish rotation. And then we consolidated. Now, when I say bullish rotation, that's just a term that I use for when the market has made a bullish move. However, we haven't gotten the three-step move that I require to officially say that we're in a trend. So it's kind of like, yeah, we're more bullish than bearish, but we're technically not yet. We can still be going into consolidation. And you see the market went sideways for a fair period of time, and by fair period I mean by basically the end of last year. I think what, October? When did we start here? Late October to December of last year, just going sideways before retracing down. Now, after we had our retracement, our most recent move was a rally up, and the rally broke and penetrated our previous level of consolidation, finally giving me confirmation that we are indeed in that bullish trend. So you can see it took a while. We were watching Canada for months and months and months, really not knowing what type of trend we were in. Now, that doesn't mean that you can't take trading opportunities, but it will affect how you approach them from how aggressive or how conservative you are, because you don't have basically everything lining up in your favor. So our recent move after this, if we're going to call this our new structure high, this is the point that is going to validate our bullish trend, right? This higher high, higher close. Our most recent move is this. We had an outside return, so a pullback. This is a classic pullback trade, right? Previous resistance right here was broken, then turned to support. Price action retraced to that level, retested that level, and then we rallied up once again, creating a new structure high. So at this point, bullish, 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 bullish. That's all I'm thinking. I have no reason to think otherwise. And I'm looking for another pullback trade, right? If price action is going to continue to trend and move in that direction, how can I get involved? And per my trading style, I like to take advantage of the pullbacks, or I like to take advantage of the retracements. So we go down to the 4-hour chart, which is our lower time frame. Obviously, we have a nice pullback right here. We have a very nice reversal candle right here. Now, I would love for this to be, you can see the candle right here in green where we had a high momentum bearish candle, this big red one, followed by what looked like a continuation in bearish momentum. However, you can see the wick on that candle was very long to the downside, meaning that although the sellers initially pushed down on that candle, they were met with buying pressure, and the buying pressure was able to push that candle back up and basically make up for all of the losses that took place. And you can see that to a certain extent on the next candle as well, with the long wick on the downside. Now, this isn't the ideal situation. Ideally, I would love to see this test, that probe at the lower level, because this is the key level that is going to dictate my decision in the market. I call these decision points. If price action reacts one way, then I think this. If price action reacts another way, then I think that. So we haven't really tested that yet, which I want to take note of and keep that in the back of my mind, and keep that in my my pre-market checklist as well. But as we go down to the 4-hour time frame, we have a nice simple pattern formation. This is going to be called a symmetrical double bottom. And for you guys that are new, a double bottom is exactly what it sounds like. Price action has rallied down. We found a bottom, right? We retraced off that bottom into previous structure. Look left, structure leaves clues. And then we put in a second bottom, right? So we put in 2 tests of this level. And this is a nice conservative, not there are obviously more conservative approaches you can take, but it's a nice conservative way to approach a trading opportunity because it gives you a certain amount of confirmation. Now, again, best case scenario, we would have probed this level, but if you've been involved in the market, the real markets, not like the YouTube markets or the trading book markets where they show you all the perfect opportunities. If you've been involved in the real markets for any time, you know that very rarely does the market give you a perfect setup. So you get what you get, right? You get what you get, you don't get upset. So nice buying opportunity here with this double bottom. We rallied a little bit late Friday, so obviously the price has changed a little bit. The initial entry would have been down here at about 128.59. We're looking at about 40 pips past that right now, but this could potentially be a buying opportunity for you to get involved in the next trend continuation trade. And what I mean by that is, right, looking for the next leg up. Now, there are lots of ways we can trade this. I'm going to try and keep this as, because this is the YouTube version of this video, we're going to keep this kind of as basic as possible, meaning we're not going to go over each and every single way you can trade this, whether you're a trend continuation trader or a trend following trader or a counter trend trader or this or that, because ultimately how you trade this and how you take stops and targets is going to be based off of the type of trader that you are. And each trader is going to be different. You have traders that like to catch the trending move that are going to hold forever, kind of like what we did with the, similar to what I'm doing with the dollar yen trade. There's going to be other trades that are more counter trend, have more of a counter trend mindset, and they're looking for the first chance of danger. So they're going to have very, very small conservative targets. And, many of you guys are probably asking, well, which way is right, which way is wrong? Well, neither. The way that you consistently do it, whatever way you're supposed to do it, right? So when you made the decision of this is how I'm going to trade this specific setup, whichever way you're going to do it is the right way, as long as you're doing it consistently. But let's look at this from a trend following perspective. So someone that is looking for the bigger move and they're looking to kind of catch the next extension up. We want to ask ourselves 2 questions. We have entry already, so the next 2 questions we need to ask ourselves are targets and stops. Well, I told you about this zone right here earlier, right? This is going to be a key decision point for me. So if this level is violated, so below this yellow box, right, I know that I'm wrong in my prediction. So this is where I want to have my stops at, below that previous level of structure. We'll just put it right here. Targets, right? If you're predicting an extension, what we want to do is we want to go back out to our daily chart, and you can go to your 4 hours as well, but I like the daily for the perspective. Go back out to our daily chart and ask ourselves, where is the next place that I think price may run into trouble at? And there's a few ways you can do that. You can look at structures. You can literally look left and look at areas of support and resistance. You can also take out maybe a Fibonacci tool, for example. Take a Fibonacci retracement, drag it from your swing high right here to your swing low. You're going to see there's a 618 right here. There's a 786 a little bit higher. You can take a Fibonacci extension tool of your most recent move, right? So swing low to swing high right here. You can see that. Look at that. We have a 127 right here. You can take even the smaller move, this one right here, swing low to swing high and back down. Let's see if that gives us anything. That's going to give us another 127 right in this level as well, right around an even handle number, 132. So maybe this is a level where you're looking for your first extension, right? You have two Fibonacci levels lining up. I'll go ahead and just make this a little bit clearer for you. I know it's confusing. Isolate the fibs. Boom, boom, boom. I guess we don't really need the Fibonacci retracement. That didn't really give us anything, but we have two Fibonacci levels here. We have two 127s, right? We have an even handle number, so a psychological number at $1.32 even. And if we look left, right, we have a pretty significant level of structure. We have a place where price action came down and found, after we got underneath it, found resistance, traded above, found support, right? Traded above, came back down, found support once again. Not a bad level to look for extended targets. And of course, there are many other places in between as well. You can look for a first conservative level here, second conservative level here. And if you're aggressive, you can even look for a retest of previous structure highs above 138. Again, that's not what's important, because once you have your trading plan fully developed, you'll know exactly where you can look for targets based on your rules, or exactly what type of analysis you need to do in order to find those secondary targets or extended targets if you're shooting for something further. So nice, quick, simple trade here. Again, a simple, classic, I should say, a classic trend continuation setup where you're looking for a pullback trade. Within that pullback, we have a classic and simple double bottom pattern as a potential reason for entry. And, my philosophy on the markets is simple. Keep it simple. That's a lot of that's a lot of time saying simple. That is bad. But I don't care. I'm tired. I just drove 2 hours in the snow, so it's going to be what it's going to be. But you don't overcomplicate things in the market. It's amazing how many of the classic setups, the setups that existed before we even had charts and fibs and indicators, it's amazing how many of those setups are still the best type of setups to take today. So instead of confusing yourself with all of this fancy stuff, I'd recommend learning the basics, mastering the basics. And if you want to add on stuff afterwards, RSIs and MACDs and Bollinger Bands, right? Do that after you have a clear understanding of price action on its own right. All right, so I appreciate you guys joining me. I know the voice wasn't the best, but I still hope you were able to get some value out of this video. And if you did, let me know by hitting that like button, leaving a comment, and subscribing. Also, if you guys haven't done so already, I have a podcast out called the Trading Coach Podcast. The feedback has been amazing. It comes out every Monday and Thursday. However, I need you guys to continue to do me a favor and subscribe, rate, and review the show. My goal is to make this correction. I will make this the best trading podcast out there, but I can only do that with your help. So it takes a second. Head over to iTunes, head over to Stitcher, SoundCloud, Spotify, wherever you subscribe at or wherever you listen to it at, and just leave me a review, leave me a rating, and I can't put into words how much that would mean to me. So I'll see some of you guys tomorrow. I'll see the rest of you guys possibly next week. And until then, plan your trade, trade your plan. Take care.